Well, a recent bill that's been passed that opens the door for changes to the way UPI payments are charged. The bill removes a legal barrier that currently prevents banks and even payment service providers from levying a merchant discount rate or MDR on UPI and certain other digital payments as well. And that immediately raises a question, and that is, will UPI no longer be free? So let's quickly break that down for you. First, what is MDR? It is essentially a fee that is paid by a merchant to a bank or payment processor for processing digital payments. UPI has operated under a zero additional charge model, so merchants have not been paying this charge. However, now the government says that any MDR, if introduced, will be nominal and limited to a smaller set of merchant transactions. The UPI and Services Steering Committee will decide whether MDR is actually introduced and how it is going to be structured. The other question that arises is, what does this mean for you? The government says person-to-person UPI payments will remain free. So if you are sending money to a friend or even a family member, there is no new UPI fee. And the government says that the vast majority of merchant transactions will also remain free. But some high-value business payments could be different. So who could face higher costs? The likely target is large merchants and high-value commercial transactions. Some reports suggest that an MDR of around 0.25 to 0.4% could be allowed on non-person-to-person UPI payments above 2,000 rupees with a cap on the charge. Small businesses below a specified turnover threshold exempt. That is not yet the final MDR structure. That also means that your routine payments for things like milk, vegetables, auto rickshaws and taxis are not expected to be affected. Large retailers, e-commerce platforms and other high-volume merchants could bear the bulk of any new cost. Now, just because person-to-person transactions or small merchants are for now exempted from MDR does not mean the consumer will not pay any additional costs. If a merchant has to pay MDR, who absorbs that very cost? The business could absorb it, or they could even pass that cost to the consumer. The government can ensure that there is no direct UPI fee on the consumer, but it cannot completely control how every business sets its prices. The shift to MDR marks a move away from the zero-cost model that helped UPI scale rapidly, but also left banks, fintechs, and payment networking carrying the cost of that very growth. With transaction volume surging, the government is now looking to create a more direct revenue stream to help fund the infrastructure, cybersecurity and technology that is required to keep the digital payments ecosystem running. The proposed levy is also significant from a trade perspective. Global card networks have long argued that zero-cost UPI gives India's domestic payment system an advantage over international card networks that operate on a fee-based model. By targeting only high-value merchant transactions, the government is attempting to balance two objectives, and those are, one, keeping digital payments affordable for ordinary users while making the payments ecosystem more financially sustainable, and second, potentially easing a key point of friction in India-US trade talks going forward.